Welcome to the Northern Virginia Market Watch, brought to you by Real Estate Business Intelligence, an MRIS company. Let's examine the most recent numbers from the Northern Virginia housing market, which includes these areas. Compared to the last three recessions, economic growth following the most recent recession is modest. For example, in the 3 years following the 1991 recession, GDP grew an average of 3.2% a year. Over the past 3 years, the annual rate of GDP growth has been only 2.2%. The economy is still adding jobs, but August was lower than most analysts had expected, with only 96,000 new jobs, and the July jobs number was revised downward. The unemployment rate dropped to 8.1%, but that small decline was likely due to discouraged workers leaving the labor force rather than unemployed workers finding new jobs. Over the last 12 months, the U.S. economy has added 1.8 million new jobs, fueled by growth in the private sector. These private sector gains were partially offset by job losses in all levels of the government sector. Slow economic growth is likely the story for the rest of the year. At its September 13 meeting, the Federal Reserve initiated a third round of mortgage-backed securities purchases, or quantitative easing, and extended its commitment to maintain low interest rates through mid-2015. While intended to spur private sector lending, job growth, and support housing's recovery, there is no consensus these actions will have a significant impact, and Congress will have little appetite for legislative activity prior to the November elections. The Northern Virginia economy continues to show relatively strong job growth. The unemployment rate in Northern Virginia is just 4.3%, down from 4.4% in July, and this remains one of the lowest regional unemployment rates in the nation. Over the past 12 months, the region has added about 25,000 workers. Buyer activity continues to grow in the region's housing market. There were 3,050 sales in August, up 9.7% from this time last year, and the highest August total in 3 years. New pending contracts have also increased relative to the past few years. There were 3,081 new contracts signed in August, which is 7% higher than last year. While buyers are absorbing the inventory of homes for sale, active listings are decreasing. The 6,310 active listings at the end of August are 25.7% below August 2011, and the lowest August level seen in 8 years. The declining trend for new listings also continues, with 3,456 new listings in August, down less than 1% from last year's level. The tightening supply of homes for sale is driving up the median sold price in Northern Virginia, which has seen year-over-year gains every month in 2012. At $395,000, the median sold price is up 4.6% from August 2011. While this has declined over $5,000 from July, this level is in line with seasonal patterns. Homes are also selling faster. The median days on market has dropped 9 days since this time last year to just 22 days. Despite the late summer housing market activity, overall economic uncertainty and pending federal actions will likely temper the momentum as we head into the fall. Even with historically low interest rates, demand will likely ease up and price appreciation will moderate as some potential home buyers and sellers retreat from the market. That's the Northern Virginia Market Watch for this month. Check back next month for the latest.